So you don't fight mercantilism with free trade. That's insane. I'm sorry, economists of the world, but you cannot do that. That's not how it works. You have to mirror back what's being done at you. That's the only way you can resist it. So once you start expecting that to happen, you start expecting things, as I said, like Intel, like financial repression, like companies being told, well, this is as much money as you need to make in that sector because we want you to make more goods at a lower profit margin.
What if everything we thought we knew about global markets was about to change forever? What if the post-Cold War order isn't just fracturing, but giving way to a new world where economic statecraft, not just fiscal and monetary policy, but economic statecraft drives outcomes? So joining me to unravel all of this and to jump straight into it is Michael Every, global strategist at Rabobank. I hope you enjoy. And if you do, please give us a like, give us a subscribe as well so that the YouTube algorithm knows what kind of content you like to watch. Let's get started. Michael Every, how are you, sir?
I'm good, thank you. Yourself?
Very good. This conversation, I've really been looking forward to it. You predicted the shift away from globalization, the emergence of a multipolar mercantilist system. I think we spoke about that on the previous podcast we did. And you also warned, before it happened, you warned that tariffs were going to be used to rebuild the industrial capacity in the US. And you predicted a whole bunch of other stuff as well. So firstly, why don't you tell us a little bit about your role as global strategist with Rabobank? And then secondly, tell us a little bit about how you employ your grand macro strategy to effectively predict the future.
Okay, let me start there. So most people having analytical roles in markets or investment banks fit within the field which we call macro strategy, which is to look at things like GDP, inflation, or the exchange rate or interest rates, or some combination of the above. And you either look at one particular market or you look at one particular geography or a cluster of them. And I've been doing this role now around the world, 9 different countries, lots of different facets of it for nearly 30 years. And most of that was in macro strategy, too. Now, the role of global strategist is a bit different, and it's one that's evolved within Rabo around myself over a number of years. And it's to be cross-asset, cross-geography, and cross-disciplinary. And grand macro strategy is my shtick. I'm kind of, trying to peddle in markets, as it were, to explain how I see things and how I think we all need to see things from now on. Because back in early 2016, I published a report called Thin Ice, which was pretty controversial at the time. And I said, if you look back at world history and global economic history in particular, you'll see that we've been through 2 iterations of a global liberal system or a world liberal system, liberal world order, whatever, version of that you want to call it. And both of them failed in the past. And if you look at the structural pillars that held that liberal world order up, you will see that as soon as you destabilize the geopolitical framework so that you have a rival previously to the UK, and I posited this time to the US, all the other pillars will start to crumble at once. And once that happens, every single norm that you presume can never change in markets will change. And in fact, you cannot predict anything accurately longer term in markets unless you understand that geopolitical backdrop. And so, grand macro strategy is looking at macro strategy through the lens of grand strategy, which is what always historically, and I'm going back thousands of years here, was how kings and emperors, etc., used to try and run their kingdom or their empire in a zero-sum realist world to make sure that all the instruments of state, both economic, political, and military, were all working together so that you win and other people lose. And if you accept that particular set of lenses, you will grasp what's going on in the world right now. And if you don't, you won't.
Right. Another term that I've heard you use a lot lately in some of the podcasts that I've listened to you on is this term called economic statecraft. And I'm wondering if you could maybe elaborate a little bit on what that term means and perhaps just provide some examples or an example just to demonstrate how that's actually at work right now?
Sure. So within the taxonomy that I just presented, which is grand macro strategy, there are three different tools that you can use. There's the political tool, political statecraft, which I think every country will always use forever. So either diplomacy or threats, trying to make alliances or trying to scare people. Then you have military statecraft, which not every country in the world is now capable of using. In fact, it's so expensive that fewer and fewer are able to do it, but which still obviously has serious impact and can completely change the playing field. We've seen recent examples of that, of course, with the US bombing Iran. And then we have economic statecraft. And this is perhaps the most controversial because whilst most economists or macro strategists will accept that there is political statecraft, which they kind of ignore or just talk around, and there is military statecraft, which they ignore or talk around, and they certainly don't see as being the driver of what's going on in their area. Economic statecraft is when you use the economy alongside politics, alongside the military, as a tool to try and jointly achieve a foreign policy or a national security goal. So, to put it in terms which will really have people scratching their heads, but it's how things do work in the real world. What interest rate will help you win a war? What fiscal policy will help change the foreign policy of another country in a direction that you want? What trade policy on top of both of those two will also help? And those are just three examples, but almost any economic policy can be adapted into economic statecraft if it joins up with others rather than acting purely in isolation, and if the actual very clear goal is foreign policy and or national security rather than a market or economic target.
Okay, so that's quite different to how we generally think about it. We apply our monetary policy frameworks, our fiscal policy frameworks, our sense of right and wrong, what's fair, what's reasonable, what we've always known. But in reality, what you're saying is that all of that at the moment can probably take a back burner, right? Because what really is going on is that all these things are working in tandem to achieve something much bigger that we're probably not ready to deal with yet. Is that fair to say?
Yeah, let me try and rephrase it slightly. So everything I've just described can be compressed down to this one question. Instead of asking what's GDP, 2, 2.1, 1.9, what's GDP for? And obviously that has a very large domestic component. What are we producing? What are we exporting? What are we importing? How reliant are we on other people, both as exporter and importer? Are we happy with the balance of our economy or not? What would we like it to look like versus what it looks like now? And of course, then assuming that we're in a realpolitik world where what does my economy look like vis-a-vis others if I don't trust them or if I can't rely on them or if they could potentially be a threat 5, 10, 15, 20, 50 years from now? What do I have to do? What is my GDP for in that respect? Is it offensive or defensive? Is it collaborative or is it more self-reliant? That is the key question. And once you start asking what is GDP for, you realize what a farce the technocratic framework that we've set up is. For example, so interest rates, now they've just gone down in New Zealand, of course.
Yeah, that's right.
And a macro strategist will talk purely about whether they're going to go down further or go back up again. Now, that's valid. I've done that role for many, many years. But let's presume you start from the assumption that there is a geopolitical threat, hypothetically. Okay, fair enough. If you lower interest rates, does that help you resolve that geopolitical threat? If you raise interest rates, does it help you resolve that geopolitical threat? And the answer can be yes to both of them, depending how all your other policies link up, if you realize that's why you're doing it. So if you look at three different lenses on the world, the first one is the economic lens. In the economic lens, the more free trade you have, the better everything is, always, forever. Amen. Sit round the fire, sing kumbaya, toast your marshmallows. You won't find an economist except for heterodox fellows like myself who think that's not true. It can be true at times for certain countries with certain GDPs per capita, with certain geopolitical frameworks. Sure. But it's not universally true. It hasn't been historically. It isn't conceptually in terms of how that was argued even by the the forefathers of free trade, Smith and Ricardo. And there are real question marks over it that just aren't taught, unfortunately, in economics classes. But if you take the economic view, yeah, free trade, always good. If you take a statecraft view, you've got two different camps. You've got the idealists and the realists. So the idealists think, okay, yeah, the world is an uncertain place, but if we all cooperate, we can all sit around the campfire toasting marshmallows, singing Kumbaya. So it correlates very closely with the economics view. And if you're a statecraft idealist, you'll be going around the world trying to do free trade agreements with people because you think the more we trade together, the more friendly we are, the less tensions there will be, and the world will be a happier, safer place. A statecraft realist will realize that actually, very often, opening yourself up to trade weakens you. You become more reliant on imports from others. They may be cheaper, but what if they don't sell them to you? What if you can't get fuel? What if you can't get food? What if you can't get key inputs so your military machine then doesn't function and you can't defend yourself? This is how a realist thinks. And not only that, a realist understands that one of the few parties that will agree to a free trade agreement is a country knowing that it can absolutely coerce you in the future via free trade. For example, you do a deal with them, you become completely reliant on them as an export market or on imports from them, and then they know they can turn off the tap at any point in the future and you have to do whatever they say. So
Sure.
once you understand that people who are signing a contract with you may not be doing it for the same ideological reasons that you're doing it, or the same conceptual reasons, it forces pause for thought, or it should do. Sorry, back to you.
No, no, thank you. That's good. And so with the whole model of statecraft, does that imply that the world is going through the I guess like the birth pains of potentially another global conflict that which will ultimately lead to a hot war? Is it kind of like another indicator that suggests some more direct military conflict is coming with China and the US?
Let me answer that question in two parts. Um, the really gnarly bit I'll get to in a second.
Sure.
But in terms of the interest rate, first of all, the key point I want to stress here is that if you've got a high interest rate, that can be great if your opponent's got a low one and you want to suck money out of them, for example. So you can use interest rates as a tool. Like so for the US, for example, if they were to raise interest rates, which no one's expecting at the moment, money would come flooding out of some of the countries that they see as rivals. And that can really seriously destabilize other countries. So it can hurt them, but it can hurt others more. And you always look at these things in relative terms. On the other hand, if you cut interest rates, well, okay, your economy gets a boost, great. Government debt gets cheaper to finance, great. And you're going to be spending a lot of money as a government, presumably, if you're undergoing economic statecraft. But that alone will not cut it. This is the key point. So let's say, for example, New Zealand, and I know it's extremely unlikely, were to suddenly say, right, we do worry about the global outlook. We are going to cut interest rates 200 basis points. This is just an extreme example because we really, really think there's a geopolitical threat out there. Well, what makes you think that would do anything other than push house prices up? The first thing that would happen is house prices would go up. Tell me how you're about to defend yourself with higher house prices. The answer is you're not. It's farcical. So that speaks to the broader point I'm making that it has to be joined up with other policies aimed at what is GDP for. And you have to make a decision. Is it for higher house prices or not? And if it isn't, what other measures do you put in place to ensure that when you cut interest rates, it doesn't just flow to housing rather than to industry or the military or the government, et cetera, et cetera, et cetera. So it forces you away from free markets and it forces you to a much more corralled market, similar to what we've seen in recent terms with ESG, for example. But this is on steroids and where the S, the sustainability, means something very different. On which note, I have to just add Bloomberg headline this morning. About half of European ESG funds are currently going into companies that make nuclear weapons. So, so there you
Nice.
go. That's this. That's the S.
Good stuff.
Anyway, but going back to the hot war point, which is a a segue from the nuclear weapons. I don't think we're heading for World War III. I want to be abundantly clear because an easy way to get clickbait is to say Michael Every said World War III. No, that's not what I'm saying. What we are seeing, however, very clearly is a global Cold War between emergent blocs, which was very clear to me back in 2016, and it's crystal clear to most people now. And as we start seeing those blocks fleshed out, there is competition over where supply chains will go and where floating countries will go at the margin. Are they in this block or that block? And we are seeing wars in many locations there. And we will continue to see wars in those locations at the margin. And we have several already, and more could arise. But that's not the same as World War III.
That's a good point. Okay, so skirmishes around the edges where these rifts are occurring and supply changes are realigning, but you don't see something that's more of a unified struggle against a common enemy per se, do you?
I don't think anyone's ready for it. I mean, war is now so incredibly complex and incredibly expensive that what you're seeing that fewer and fewer countries can actually even afford to start developing weapons platforms. You've got countries like the UK, which was a global superpower militarily for the longest time, and then at least a great power. Well, the UK's currently got two aircraft carriers, one of which can't leave port and is being cannibalized to keep the other one going, and the other one hasn't even got enough aircraft on it to actually operate as a proper aircraft carrier. So there's only a few countries left that can actually project any kind of power. So that limits the risk of there actually being a full-on war. But
Yeah,
ironically, at the same time, that increases the risk of there being lower scale, really nasty wars like Russia, Ukraine, because you don't have that overwhelming power as a backdrop to say, this is a mutual assured destruction, don't go in. So the lack of major wars means we can have many more small ones.
interesting. Now, this concept that I know about just at a very shallow level, the Thucydides trap, is something I want to ask you about. You might have a different way of describing this, but the idea that when a rising power threatens to displace an existing power, like a dominant power, conflict becomes almost inevitable, kind of like what we're talking about here. But we're talking about China and the U.S. specifically. So, how much of the interaction between the U.S. and China today is an outworking of that Thucydides trap?
Well, I mean, obviously, that's a thesis that's been floated for many years now. And looking back to antiquity is useful in terms of parallels and geostrategic thinking. I think Athens Sparta is a very, very loose fit for the US and China, to put it
Right.
mildly. And in fact, some experts on this field would say it's a very lazy fit for that particular one. But if you're talking in general terms of who's hegemon and who's challenging that in various different dimensions, clearly the central focus, yes, is the US versus China. And you see that everywhere you look. And that, I think, is the central uh, foundation that you have to have to understand grand macro strategy. That the US is determined to resist that as much as possible. China is using a variety of different strategies to try and advance its own interests, which any country in its position would do, by the way. It's completely natural. And everyone else is going to be caught up in that maelstrom. What you also see at the same time is country after country, be it New Zealand, of course, Australia, Canada, recently Europe, all of which have rejected this and said, we want no part of it. We're not going to play a role in this. This is nonsense, have all been sucked into it. And so far, one by one, they're all being forced to sign up on the US side. And that is exactly what will continue to happen.
In these Five Eyes countries, US, UK, Canada, Australia, New Zealand, hopefully I haven't missed anybody there. There seems to be this really strong distaste for President Trump. I'm from Canada originally, and being taken over as the 51st state is mildly displeasing to say the least. So I totally understand the anti-Trump sentiment that occurs, but at the same time, I kind of look at if I was a country that wanted to drive a wedge between one country and the US, I'd take advantage of that massively. So a little bit conspiratorial or on the edge here. Do you think that it's possible that China might be playing into this a little bit and pushing that narrative through its networks to drive a wedge between these Five Eyes countries and the US?
Well, you don't have to listen to my opinion on it as grand macro strategist, who's looking at all the geopolitical developments as a fusion with markets rather than being any kind of intelligence expert. Listen to the intelligence experts. There are a plethora of intelligence reports from Western intelligence agencies saying exactly that,
Right.
and also saying that Russia does it and Iran does it. So it's not just one party, but absolutely those who are congealing around an alternative bloc naturally try and destabilize the rival bloc, just as Western powers do with the other bloc. Don't think we've got clean hands here. We do exactly the same thing. That's what
Yeah.
power politics is all about. So yeah, that's there. Now, in terms of Trump, I don't want to get into the personalities of it or the specific politics because it's not my job to take a stand on anything like that. I'm here just to analyze. And I completely understand everything you've just said, and it's echoed back to me by many, many people that I talk to around the world. What I will say is that in terms of what's being physically achieved, whether you like it or not, Trump is getting results in terms of countries kissing the ring. So Europe, for example, made it abundantly clear they would not sign an unfair trade treaty with the US. They would not, sign up to a reverse Marshall Plan to invest hundreds of billions of dollars in the US. They would not spend 5% of GDP on defense. They would not take over sole responsibility pretty much for looking after Ukraine. You say it. Europe said they wouldn't do it. They're doing all of them. All of
Yeah.
them and more. And they will continue to have to do all of them and more, because once you understand grand macro strategy, you understand where power lies. And for example, and pivoting back, most people think power lies with central banks. And most people in markets will talk about, the Fed's going to do this, the ECB is going to do that. Okay, the ECB is truly independent within Europe. Absolutely. It's probably the Eurozone's or Europe's most successful institution. But the Fed, the most powerful central bank in the world, who sets the tone for everyone else, have you been reading the headlines recently? Have you seen the politicization at the Fed? By the way, which is not new. It's very old. Other presidents have done it too. We just politely edit that out of history. Lyndon B. Johnson, anecdotally, directly threatened a former head of the Fed, et cetera, et cetera. So this is not new, but we have the Financial Times just this morning, as we're recording this, basically saying get ready for the Magarization of the Fed, and that's a no-brainer. That's an absolute no-brainer if you look at it. So where does power lie? No, not with the Fed, with the politicians. But people in markets don't want to talk about that because they're not political analysts. They just don't know. They know how to talk about interest rates. So therefore, everything. When you've got a hammer, everything looks like a nail. But you need to
Yeah.
have a broader set of tools in your toolkit.
Totally. Yeah. And I think that broader set of tools in the toolkit is something that we are really lacking as investors when we're thinking about how fast the world is changing and the ways that it's changing. Yeah, I think that is our greatest blind spot, is that we don't like to mix our veggies with our potatoes and our meat, right? Like we got to mix it
Yeah.
all up together and kind of sample the whole plate. Otherwise, we have no idea what we're eating. And like just going back to Trump, though, do you think that he actually understands how his policies are fitting into this larger global movement towards like neo mercantilism, or do you think he's just instinctively doing what he thinks he needs to do to make America great again?
With Trump, it's almost certainly instinctive. I don't believe he goes around reading books about the Thucydides trap, etc., etc. But
Yeah,
all you need is the instinct to act. And then you need a cohort of advisors around you who have read all the requisite economic statecraft texts, which I can assure you they have, and understand how to then finesse and implement that. But it doesn't work if you're surrounded by a cohort of experts in economic statecraft if the president thinks like an economist and says, well, you can't do that because reasons. You can't do this because markets. You can't do that because status quo. Then nothing will happen. And equally, if you have a president who has this instinct to do these things, but is not surrounded by a cohort of people who understand economic statecraft, you give them a direction and they don't implement it because they don't understand it. And they think, well, okay, but I'm going to water this down because markets and appoint people I like because markets, and then nothing changes. But
yeah,
right now, you have a president and a cohort around him who understand that everything needs to be radically reworked, everything. And
yeah,
as a result, far more so than markets take on board, because markets are just looking at markets. As we said, that's what markets do. Everything
yeah,
is being radically, radically reworked. Now, are there ways to win in that environment? Absolutely. Are there ways to lose your shirt in that environment? Absolutely. But the key thing is to understand the game has changed. And then you can either win or lose based on that fair understanding of the rules. And far too many people just still don't understand the game has changed. They spend their time just ranting about Trump, which is not going to help you understand the current environment at all.
fair point. Okay, so changing tack a little bit,
Mm.
Bitcoin is one of those areas that I love to explore. I love to go deep in that space. But again, it's like, yeah, if you are a hammer, everything is a nail, right? And so everything works within a nice confined space when you're in that Bitcoin headspace. However, when you zoom out, you realize that it's a tool. And in this statecraft paradigm with stablecoins, Bitcoin, the Genius Act, potentially injecting another 1.75 trillion US dollars into global circulation, the strategic Bitcoin reserve, now part of official policy. they could reassert the US dollar's dominance in the world. Now, I know in the past you've referred to crypto as cryptocurrency. I love that phrase,
I
by
have.
the way.
Yep.
But in an era defined by economic statecraft, how do you see these instruments fitting together into the bigger picture? Like, are they just financial innovations, or do you think they represent deeper strategic plays for monetary sovereignty for the US?
Well, I've changed my view, and if there's one thing that I am perfectly willing to do in public, and I think relatively rarely compared to everyone else who's always right, and in hindsight was always right as well, is to say, well, I was wrong on that, because I absolutely thought crypto was crapto because I couldn't see what it was for.
Right.
Going back to what is GDP for, I could see how it could be a wild bubble, everyone could, but I didn't see how that helped the US geostrategically, and as a result, my guess was that it would be regulated out of existence, and we came very close to that.
Yeah.
We came very close to that.
Yeah.
Obviously, this White House sees it very differently and understands that if implemented correctly, and of course, that's the big question, will it be done correctly? It can be transformative for the global financial and trading architecture. And to try and unpack that really simply, the global system revolves around the Federal Reserve and the US dollar. Absolutely. Everyone looks at what the Fed does. That's the base interest rate pretty much for most of the world. Money can flow wherever it wants. So this is the system as was. Money can flow wherever it wants with a margin over that, and markets can decide wherever they are in the world what they want to do with it. It's a global free market based on that liquidity. Well, obviously the Fed's being politicized bit by bit, and to one extent that's just about lower rates. But there's a broader angle to this, which is that the dollar is of course increasingly questioned, or the role of the dollar. Because as Trump puts up tariffs and starts changing the system, people are saying, well, why are we putting up with the US? Why are we putting up with US deficits? Why are we putting up with US debt, both of which are sky high, of course? There must be some better way to organize things. And particularly given the fact that dollars enter the world economy primarily through the US trade deficit, the fact that they import so much is how the dollars flow out into the rest of the world to keep the whole system going. So if the US wants to narrow its trade deficit, on one hand, you'd say that's dollar bullish, but it would, of course, destabilize the entire global system. And people would say, well, we have to hold another currency instead as reserve currency. And when you've got Russia and China and Iran et al. In the background lobbying, and even Europe lobbying for alternatives, you can see
Yeah.
how it will come under pressure. So if you bring in stable coins, to cut a long story short, if they're tied to the US dollar, which they will be 1-to-1, and if they're backed 1-to-1 by US Treasury bills, so short-term government debt, if you can get people to adopt stable coins, they have to buy your debt in order to allow those dollars to circulate, the stable coins to circulate as needed. So you ensure that your debt is covered while you are spending the money to rebuild yourself longer term, which is part of the plan too. And you can program them. So ultimately, there can be a programmable area in which they can be used. Obviously, you have complete low-cost transaction and anonymity while you're holding them in your electronic wallet. But geopolitically, the US could, experts say, start to program them. So, for example, if they notice they're all accumulating outside of US allies, you just turn them off. You just
Yeah.
say, right, the money only extends so far geopolitically. You can't use it in countries we don't like. So it's even more powerful than what the US has now with sanctions. And you could say to people selling to the US, which is lots of people, directly or indirectly, from now on, we're only going to pay you in stable coins. We're not going to pay you in US dollars anymore, like paper dollars or electronic dollars. It's going to be stable coins only. And they could tell Saudi Arabia and other oil exporting countries, we want you at gunpoint, we're telling you, we want you to only accept stable coins for your oil. So were they to do that, you've just created a market for stable coins everywhere, which means people have to buy your debt. And you can control the system where the money flows and where it doesn't flow. So it's absolutely geostrategic now. It's absolutely part of grand macro strategy.
Some would say
It
it's
is a
genius. Yeah.
Some would say it's genius, yeah. And to be blunt, even though the technicalities of this are challenging, and trust me, it took me a long while to get my own head around it. It really did, because this is something new for many people. Even experts on global balance of payments are suddenly realizing, hang on, this is a whole new entity. You're creating something de novo, which doesn't fit into how we understand how balance sheets work as they are now. You don't have to be a genius to see how it strengthens the US hand. So China's now talking about, for example, bringing in its own stablecoin backed by the renminbi. but that's
Yeah.
going to be limited by the fact that they have a closed capital account. Money can't flow in and out of the country freely. So you can have that would basically be two different currencies. You've got a Chinese currency circulating internationally and another one domestically. We already have two different exchange rates, but these would be two different currencies. Uh,
Right.
the headaches that start to occur from this are enormous, just as they are, by the way, with tariffs into the US now. It's enormously complicated to work out what tariff rate you're now going to be paying for what product. But this is part of the design. You're going away from a one world, simple, one level of interest rate from the US plus everyone else, plus or minus a little bit, almost no tariffs anywhere, so you can sell whatever you want to anyone, etc., etc. No, everything's now going to be fiendishly complicated. And the idea is to try and make sure that money stays where you want it to stay and goes where you want it to go,
Hmm.
as does production of goods.
So then, thinking about Bitcoin, then how is the U.S. Bitcoin strategic reserve going to be helpful? And I've heard this explained recently that it's a really amazing sponge to soak up the excess liquidity that may be created within the financial system, because there's very few negative spillover effects. Like it's not going to jack up housing prices if the price of Bitcoin goes up. How do you see Bitcoin actually working as a strategic asset for the U.S.?
Well, that's an interesting way of putting it, and I see it in similar terms. That effectively, if they are bringing in stable coins for trade within a US bloc, and that's my thesis, that US allies who have now signed these trade deals with the US will be incentivized to move over to stable coins. Countries who have not signed a trade deal with the US, and we're talking about China in particular, et cetera, et cetera, the whisper is that they would favor eventually doing business in Bitcoin instead. Because what that effectively is what we call a neutral reserve asset. So instead of China accumulating dollar uh, savings or dollar assets because they sell a lot to America and they earn dollars, they have to put those dollars somewhere. Now that can go into housing, it can go into stocks, it can go into bonds, et cetera, et cetera, et cetera. Most of which create debt in the US economy. So the counterpart on international balance sheets of a big trade surplus in one country is a big trade deficit and big debt in the counterparty. People don't want to see that, but surplus, deficit, and debt in the deficit country. If you then shift to Bitcoin, China can run up, in theory, okay, a whole stock of Bitcoins, but they don't increase US debt. And the US, of course, can continue to mine Bitcoin. It hopes it will do that very well with AI going forward. And therefore, it can keep minting them or mining them and not have to increase debt in order to pay for stuff it's getting for China while it's gradually building up its own supply chains together with allies so that X number of years down the line, and it will be quite a few years down the line, the US is
Yeah.
infinitely less reliant on China. It's part of a
Yes.
strategic plan, I think. Or it can just be another silly bubble because there's a long tradition of that too. We could
Yes.
go that route. If so, then the grand macro strategy is out the window and we're back to silly macro strategy and no one's asking what GDP is for. And that's always a risk. People have to keep an eye on the fact that most of the market will think like that. But
Yeah.
if it's done carefully, maybe you can have the best of both worlds.
Now, something that's developed in the last couple of days is that we have seen missile destroyers. We've seen over 2,000 U.S. Marines, at least one attack submarine get into position off the coast of Venezuela. The reason given, it's to stop the flow of drugs. Um, but I've heard you describe this actually 8 years ago, 8 months ago. I heard you talk about how you wouldn't be surprised to see the Monroe Doctrine come back into place here. So I'll get you just to explain what the Monroe Doctrine is, and then secondly, maybe speculate on what you think is going on with the U.S. and Venezuela.
Sure. So the Monroe Doctrine is a 19th century US foreign policy doctrine after President Monroe, which basically said to Europe, look, you stay out of the Americas when Europe was still full of great powers, and we'll stay out of Europe. That's yours. This is ours. These are our spheres of influence, effectively. And America basically made clear that the Americas are ours. We won't accept any outside great power having a footprint there. Well, Russia is there, China is there, Iran is there, very, very clearly. And in Venezuela, obviously. So when Trump won the election, I published a piece the day he won. So it went out the door the day he won, basically saying, yeah, the Monroe Doctrine was likely to come back as an element of US foreign policy as part of grand macro strategy because you want to control your as Russia calls it, near abroad before you project power internationally. And Venezuela, of course, has been economically mismanaged for years, but still has an awful lot of oil and very close to America. So it made no sense and makes no sense for America to have a country which is hostile to it, offers a base to China and Russia and Iran on its doorstep full of oil, which America would like. So I don't know what will happen there. And I think there is a lot of truth to the fact that there is narcotics flowing from Venezuela, in which the parties just mentioned certainly are not unaware, shall we say. And it remains to be seen if this is saber rattling or something more. And of course, Venezuela has prepared millions of militiamen, for whatever that's
Yeah.
worth, to try and stand up to this threat. But clearly, from now on, you are going to have much more tension in that region until this is resolved. And the US projection into Latin America is not going to go away anytime soon.
Do you think that that's similar on the Chinese side? Is that similar to what I haven't heard a lot of this recently, but not that long ago, hearing more and more stories about how China moving into the South Pacific was occurring. Do you think that it's kind of that same sort of concept?
Oh, absolutely. I mean, for those who are seeing the great game for what it is, and for those who are trying to use grand macro strategy, not just what did the Fed say overnight, as what's guiding them going forwards, you have to look at all the efforts being made by different counterparties in different parts of the world. And absolutely, you see China extending its reach where it can. You see Russia trying to do it where it can. Europe's trying and failing almost everywhere. And you see, America absolutely doing it where it can. And to some extent, you could say those can then be traded later. Yeah, that's possible. But this game is going to go on and on and on as we push at those margins of where the boundaries will be for these different embryonic blocks.
And so, last question then. I'm not going to put you on the spot and ask you for financial advice. I know you can't do that. You're not going to do that. But at a very high level, considering everything that's going on, surely there are some areas that you would probably want to avoid as an everyday investor over the next 10 years. And there are some areas that you probably want to be positioned into. And that's not an easy thing to figure that out. But surely with some of the things that we're talking about today, that it could provide a little bit of a clue. Where should we be looking if we want to understand what the future looks like in, say, 5, 10, 20 years time from now?
If we're going down the road that very clearly we are, one of the things you would expect to see is financial repression being used, because once you start asking what's GDP for, markets don't get to decide, and you start telling them where money has to go, and you start setting what return they're going to get. And in some cases, that will be a negative return. Absolutely. You will see far more government intervention in markets. I am not shocked at all that the US just took a 10% stake in Intel for free.
Yeah, that's right. Yeah.
I'm not surprised at all, because that is exactly the kind of economic statecraft that I was alluding to as inevitable when you are, as a capitalist state, pushing back against an opponent which has hyper-capitalism in pockets, but state capitalism in all the key areas of the economy, which is China. So you don't fight mercantilism with free trade. That's insane. I'm sorry, economists of the world, and in New Zealand in particular, but you cannot do that. That's not how it works. You have to mirror back what's being done at you. That's the only way you can resist it. So once you start expecting that to happen, you start expecting things, as I said, like Intel, like financial repression, like companies being told, well, this is as much money as you need to make in that sector because we want you to make more goods at a lower profit margin. So bulk up your production. You can make a good return provided that it's on a higher volume, lower margin. But we don't want to see low volume, high margin anymore because we need more stuff.
Whew. All right. Awesome. Okay. Where can people find you, Michael, if they want to read some of the stuff that you're putting out there? I follow you mostly on LinkedIn, but I know that on X, increasingly, you're quite active. So, yeah, tell people where they can find you.
Sure. Well, okay. So the hierarchy, first of all, for Rabobank clients, please do check out Rabobank Knowledge. All of our suite of products is there. I am on LinkedIn. Yep. And I'm also on X. And I'm at the Michael Every, all one word.
Cool.
So please join the conversation.
Good. Awesome. Thank you so much, Michael, and hope you enjoy monsoon season where you're at. Hopefully it dries up soon.
Me too. Thank you. Bye bye.
Take care.